Right now, you gotta stop waiting and start taking action. Writing down your goals is one thing, but actually going out there and doing something about them is a whole new challenge. Remember, most people don't even begin pursuing their goals. Even a small step forward is better than no progress at all. Stop waiting for the perfect moment. If you tackle things when they're difficult, when they become easy, you'll excel almost every time. Instead of trying to convince yourself and others with words, let your actions do the talking.
Yeah, I'd like to welcome everybody back to the channel. Welcome back to Health Wise Guru. And I'm the host, John Shaft. As you can see this morning, the my portfolio is up this morning by almost $2,000. It was 2,000. It pulled back a little bit. Like I said, it's always a good thing when you wake up and have a positive view of your portfolio. I have a pending option this morning on Google, uh, which is what you call a call spread. I don't know if it's going to be filled, but I do have this pending today. I have some losses in this particular option trade. I have like a negative 6,000. I was trying to navigate that losses by putting a call debit spread on it, and this 12, 18, or 2026 is when it's what you call a leap. Um, like I said, I was trying to stop some of the losses of this particular option. And if you go back to yesterday morning, well, not was it yesterday morning or day before morning, day before, I was telling you guys how to do a debit spread. You can do a debit spread in order to gain short gain, to make short gain, to stop losses, especially if you have like a small account. You can use debit spread if you want to get into option trading. Matter of fact, this would be an excellent strategy if you want to get into option trading and you have a small account. I'm going to explain to you later on today again some more about the debit spread, just in case you guys missed something. Just in case I missed something. Our buying power 596, and that come from yesterday. It had such a profitable day yesterday. It went up like 4,000, like 4,500 something like that's what I actually made in my portfolio. And 596 is when we have a profit gain like that, then you'll have like a positive what you call a positive flow. And that's what you can see this morning. I have a positive flow of almost $600, and you can do anything you want with that $600. You can either you can reinvest it back into the market, or you can just simply withdraw. If I was to withdraw it, because I have what you call a margin account, I can only take half of it because the other half will go towards the uh, the particular margin that's in the that's against the portfolio. So I probably just turn around and just reinvest the whole thing. So hopefully this option that I have pending this morning will get filled. I don't know. If not, I just let it ride on out. And I was thinking about sometime about having an option. If it's going against you in some kind of way, and going against you is like when you have an option and hit the strike point, and it goes way above the strike point, uh, strike price. I mean, from what you set. If it go way above, that's called out of the money. And if it's down, if it's below, then that's called it's called into the money. If it's going way out above and hit the strike point, strike price at what you set, and it's out of the money, and that means when it matures, then you may have to sell your shares for that particular stock at the price that you set. That's all that means, and you get the and you get the money for it. You get the credit for it. You could simply just take that money and put it in your pocket or reinvest. If it's into the money and it does not hit the striking point, then that means you get a chance to keep both of the profit and the shares. Whenever you have whenever you get a chance to keep both of the profit and the share, that is a win-win situation for you. Like I said you guys before, you never want to just get rid of uh your particular stock, especially when it's a cash cow. So that's the main goal of hoping to win when you come to the trade, and that is to be able to keep your particular stock in the profit as well. If you're able to keep your particular if you're able to keep your particular stock in the profit, then like I said, you can turn around and reinvest it, and then you can turn around and take the cash and put it in your pocket, or you can turn around and just take the cash and reinvest it into another position in the market. We'll see. Hopefully, and I'll be able to stop the losses of this particular option. Like I said, yesterday was a very, very powerful and positive day. Uh, Hopefully, the day would turn out just as well. It's almost back up, almost $2,000 a game. Yesterday, when I went in the end, I had 42,000. So this morning, I have 44,000. And right now, my goal, you need to set yourself a particular goal when you're doing trading in the market. Then when you reach your goal, you decide what you want to do. Do you want to set a new goal or what you want to do? So my goal right now is to hit 50,000. Then once I hit 50,000, then I'm going on to 60,000. Once I get 60,000, then going on 70,000. And then I keep doing it until I get to 100,000. And that's the way how you guys become a millionaire if you grow your account like that. If you can grow your account and start out to 1,000, and you grow your account, take that 1,000 and grow it up and grow it to 1,000. I mean, you take 100, you grow that 100 to 1,000. Then that means you can grow that 100. That means that you can grow that 1,000 to 10,000. If you can grow to 10,000, then you can grow to 20,000. If you can grow to 20,000, you can go to 30,000. If you can grow to 30,000, then you can go to 40,000. If you can go to 4,000, you can go to 50,000. If you can go to 6,000, you can go to 70,000. If you go to 7,000, you can go to 80,000. If you can go to 80,000, you can go to 90,000. If you go to 90,000, you can go to 100. If you can go to 100, you can go 2, 3, 4, 5, and be half a million. And if you can go to half a million, you can grow it to a million. It just depends on how patient you are and how well you are familiar with the market. That would be a wonderful thing to be able to become a millionaire through the stock market. Become a millionaire through the stock market, then you're talking about generational wealth because you do not have to. You do not have to. You do not have to. You do not have to use that money. You can simply live off of the profit, and you don't have to spend the money. You just live off the profit. You just live off the dividends of that $1 million. Well, I mean, not dividend, but the interest. For $1 million, man, that would yield you quite a bit of interest. That would definitely build you a generational wealth, especially if you have children. And if you teach them to do the same thing, then they can take that money and pass that on down to the grandchildren. They teach your grandchildren the same thing, then they can take that wealth and pass it on down to their children. And that is how you build generational wealth. And you are viewing or listening to another episode of Wealth Wise Guru. And I'm your host, John Jaff. As you can see, these are these are standard trades in my portfolio now that you're looking at. This is Taiwan semiconductor manufacturer. This is the manufacturing company in Taiwan, and this is the manufacturing company that Nvidia get its chips from, and they take it and make it into whatever it is that they do. As you know, Nvidia is number one in this country. And if we was to go to war with China, because China wants to take over Taiwan, it would be for this particular reason right here. Somebody manufacturing conductors. Hopefully that would not happen. That would be the reason. Once upon a time, I had over $1,000 some dollars. Actually, I think I had over $10,000 in this particular spot because when we first, got wind of this the semiconductor uh, uh, manufacturing of these chips and things. We thought it was going to be Nvidia. I mean, we thought it was going to be Taiwan semiconductor manufacturing that was going to go up, but it turned out to be Nvidia. And so I switched that money from Taiwan to Nvidia. So let's see what we got. Let me see if I can go to the history of this. Let's see. That's the thing about trading with Robinhood. It's give you a book of information. This is the ratings of this particular trade here. 40 analysts rating 93%, 93% buy, 7% hold, and 0% sell. And so you'll be needing all this information to make an informed decision when it comes to buying and trading in a particular stock in the stock market. You can read what it's saying about it and everything. And it also gives you a recommendation that goes along with that particular stock. You got AMD, you got Nvidia, you got Microsoft, Micron Technology, Intel, Qualcomm, Alphabet, these are the techs, Broadcom, Allied Material. These are Metal, which is Facebook, Super Micro Computer. All these particular stocks here goes along with Taiwan Conductor. They have something to do with each other. And then some of them does not. Some of them are indirect is associated with it. But what it's actually showing you is what other people that have this stock in Robinhood, what they also have in their portfolio. And this is the history of this particular account that I had. As you can see, one time I had over $1,000. See, I had much as 1,300, and I had 1,600. And then I had $4,000. And I do all this to show you guys proof of what I'm doing. And I'm not a YouTuber trying to sell you pipe dreams, but I'm actually a stock market investor on YouTube, trying to show you on YouTube how you can trade also in the stock market. That's a difference in somebody that actually on YouTube trying to push something and not actually engage in what they're pushing than a person that is engaged. So I am a living live investor in real life. I'm just not on YouTube trying to blow up a channel. And I showed you my portfolio that you can see what I'm doing. And I am not, like I said, I'm not a fake. I'm not a fake YouTuber. I am a real live stock market investor. And you too can do the same thing. So to be honest with you, really, I do not have to do this if I didn't want to. But my love for my fellow man lets me come and teach you also how to build generational wealth. So I would appreciate it if you guys would support the channel. That way the channel will get out to other people that actually would like to trade in the stock market, but doesn't really know how, especially when it comes to option trading. So let's look at Nvidia this morning and see what Nvidia is doing. I even have a Uber. It's down this morning. It's in the red, as you can see. I have a computer, an Apple computer, a mini Mac. Cost me $4,000, and I can't even get into the darn thing. So this is why I'm using my cell phone. It didn't lock me out, and I tried everything. This is the second time it didn't happen. Computer can be so sophisticated now to keep somebody from breaking into it until it locks you out as the owner. And I've been locked out of it for about a month. I just ain't having time to even fool with it. Last time I was able to get the technician on the phone, and we was on the phone for 4 hours before we was finally able to get back into it. And I just don't have that kind of time to be wasted trying to get in a computer. So I use my cell phone. Eventually, I'm gonna have to call the Geek Squad or somebody like that from Best Buy and get them out here to get me back into my computer. This is why I'm using it instead of using the cell phone instead of using it. It's another interesting stock. This is going to everybody's looking at. At least some people. I'm not really looking at it, but it engages in the business of deploying software platform that serves the central operation system for its customer. It operates under the commercial and government segment. Yeah, I don't know what the interest in this particular stock, but you got some people that are interested in it. Broadcom. I think tomorrow Broadcom split 50-1, 18-1 split going to take place on Thursday. I do have Broadcom in my portfolio. I have such a diversified portfolio that sometimes it's hard to get to what I'm looking for. Keep in mind that you do not have to have such a diversified portfolio as I have. You can have 3, you can have 7, you can have 6, you can have 10. You do not have to be as widespread. You do not have to have such a wide spread of a portfolio, a diversified portfolio, in order to be successful in the stock market. You can be successful in the stock market with 3 or 4 trades. I would encourage you to do more than one. You do 3 or 4, so you don't have all your eggs in one basket. If you do one, I would encourage you to do one like the S&P 500, simply because in the S&P 500, every stock that's in the stock market has changed is in the S&P 500. So you could get in the S&P 500 and have a little everybody into it with you to trade them. Such as real estate, technology, medical, and so on. And being in the S&P 500 is like playing blackjack. And you're betting against the house. But the only thing is, you being in the S&P 500, you become the house. So that's how much of a positive thing it is to get into the S&P 500, especially if you are a new beginner. And if I was going to get if I was a new beginner and I got into the S&P 500, I would also get companies like Facebook, Apple, Google, Microsoft, Berkshire Hathaway, and Amazon. Those are what you call the Magnificent Seven. And as you can see, Broadcom right now is trading at $1,733 per share. So when the split takes place, that's going to be around 100, maybe like $106, $170 per share. Thereby giving the average investor a chance to get in on this um, particular trade. So that's why they lowered it. They lowered these by having a split, giving the average individual an opportunity to also get into the get in on this trade and make some money. And that's the beauty of it, because you could this can actually once you get into it, it could actually rise back up to that even greater. And if it does rise up and become even greater, then you that 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 is the wave you want to be on. The more you rise up, uh, the more prosperous your portfolio become. Because your portfolio grows when these numbers rises up, so your portfolio become worth more than what it is. So you can only imagine this drop down to $100 or so per share, and then it goes back up. Over time, goes back up to almost 2,000. That's a significant gain in your portfolio. That's a lot of money we've been made on the rise back up of a particular stock. So it's always a good thing when you can get in on the tail end. I mean, at the beginning of a stock when it's split like that. And I think it should be that stock. This broadcast stock should split either Thursday. It's either Thursday or either Friday. And also I think the CPI, the job report should also come out this week. I believe that's on Thursday also. And that's why you're probably seeing such a significant gain and positive gain right now in the stock market because of these particular things. So we're gonna see what happens next week. So next week I might have to pull out some profit. If I don't, then you're gonna have a lot of people that's gonna be pulling out profit, and it'll cause my portfolio to drop. And once you see this kind of gain in your particular portfolio, what you don't want to do is you don't want it to drop. And when it drops, then your value of it goes down. Like say right now it's 44,000. It could drop. It could drop 7,000, 8,000, or 10,000. Just depends on how many people actually take their profit out of it. And they have the right to do so. They have a right to do so because maybe they have been in the stock market longer than I have. You got some people, man, that get into the stock market, man. They already millionaires, so they have hundreds of thousands of dollars, billions of dollars to invest in the stock market. So when they make their profit, they get in, they get out. And so me as a smaller account, smaller investor, that when they do that, it kind of hurts my portfolio. So you have to know when to get in and get out of it also as well. And if you do, you can get it. You can get out of a position, turn around and put that profit in your bank account, or you can just keep it and you can just keep it and turn around and reinvest into the market in another position, and cause the account to still stay where it's at. The account will still stay where it's at, like at 44,000. Even though you took 10,000 out of it, it'll still be 44,000 if you don't take it and put it on your personal side or either your bank account. If you just keep it in the market and keep it on the investment side of it, like I said, it will stay at 44,000, like what you see on the screen. Like you can take that 10,000, turn around and reinvest it into something else, and eventually go to 44,000 to 50, 55,000, or even greater. That's Leviticus. That's what they doing this morning. Leviticus right now. Leviticus also did a 10-to-1 split June the 10th, and I think it was like 120 something dollars a share, and it's already back up to 134 34 share last week when they a week before that when they did the split, it jumped up to $140 a share, but then they had a pullback, and it dropped down to like 120, 21, 118, something like that. Now it's back up to 134. I had 14 shares in it. 14.888674 shares and valued at $2,000. That is today's return is $44.51, 2.28%, 3.3 the average portfolio. I have three option strategies on this particular. can't keep the profit. You got to sell the shares. It's always a good thing to sell the shares, but you want to keep your trade too. Like I said, you never want to get rid of your cash cow. So it was way I don't even see it down, but it was way down here somewhere. It was into the money. I mean, it was out of the money. But the trade I had was into the money. So it went way above what I wanted. So I made this particular trade on it, trying to mitigate some of the losses of it. And so I went up to here, what's called, and did a 205 call on it. Do a 205, simply click on that plus sign, and then once that plus sign come up, I go buy call, click on the plus sign, select me a date, which is 12/18/26. And by you clicking on that plus sign, it tells them that you also want to have do another trade. So I simply went up to 210 and also clicked on that trade. And then I had to pay a premium to cover that particular trade. And I think that premium. And what I did when I click on the 210, first I did a buy call for the 205, and then I hit a sell call for the 210. And by me doing, that's what you call a debit split. By me doing that, that kind of it lowers my price that I would have to pay for that particular option. Had I not done that, instead of me being debit, I think it was like $600. Instead of me being debit $600, I would have had to been debit $5,000. But by me doing a debit spread, that mitigated the cost of that particular stock. And what I mean by that, made it where I ain't had to pay so much money. So this is positive. This is a popular option of a strategy that I use a lot of time in order to keep from paying so much money for a particular stock. And so I'm waiting to see whether or not it's been accepted or not. I mean, when you do these trades, you have to wait for the trade to get accepted by someone. And like I said, whenever you're doing a trade, see, an option trade is simply a contract between two people, you and another individual. So you have to wait until you get somebody else that actually want to participate in this particular trade that you set. And right now it's only have three volumes. So hopefully it goes up this sometime down the day to 1,000 or more. But that's kind of low, and interest is only three contracts that's out there on this, and there's 137 other contracts that are interested in this, but they haven't gone through yet. So that's what this means. This IV is the volatility of the particular stock. You usually want the IV to be around 50%. It's around 50%. That means a good deposit trade. But I also, if it's like 30% below, I have this experience that I can still make some moves on this particular trade, because of experience that I have. You just don't make these trades and then turn around and just sit on them and go on about your day, go on to work, whatever you're gonna do. You don't do that. You got to sit down and actually watch these particular trades, make sure you ain't losing money. Chances of profit here is like 69.63%. The delta is at 600, 6204. Like I said, the delta is The closer he is to the one, the greater profitability of this particular stock. And yet, these are what you call the Greeks. You have to learn the Greeks and what they all mean. The theta gives you the percentage of the particular trade, whether or not it's being eaten away with, and the theta can eat away at your particular trade over the period of time. So you have to kind of watch the theta too, to make sure it doesn't eat up your profit. Because what you don't want to do is you don't want your profit to come to a full maturity and then be ate up by theta. If it being ate up by theta, then that means your particular trade will be worthless at its mature date. You don't want that to happen. And we're gonna take another temperature check, and then I'm gonna let you guys out of here. Right now it's at 1500. It's kind of a little slight pullback. So we're gonna come back at the end of the day and see how well we did in the market for Hump Day, Wednesday. This is July the 11th, and this is Wealth Wise Guru, and I'm your host, John Chad. And I ask you to hit the like button, share button, and subscribe to the channel, and hit the notification button so you will know when we are doing a upload. So you guys this evening and the evening video. Again, we thank you for watching.
Trading is the road to financial freedom, but it's a road filled with twists and turns. Stay committed and you'll get there. Remember, great things take time.